Hi, I'm John Darrer, and today I'm here to speak to you about employment structured settlements. Employment structured settlements are an incredibly tax efficient settlement solution for parties litigating claims of emotional distress, wrongful termination, discrimination based on age or gender, race, religious, disability, or sexual orientation based discrimination, sexual harassment or sexual assault, failure to promote, breach of contract, lost pension differential, and many other employment-based claims with the exception of wages. A bias based on interest rates misses the boat on these types of settlements. In contrast to a personal injury settlement where most elements of damages are tax exempt, in employment settlement, most are generally taxable. Therefore, the net recovery on a lump sum settlement that is paid now could be a lot smaller for the plaintiff after applying federal and state income taxes and attorney fees. Some states also have city or county income taxes. For example, in Alabama, the cities of Bessemer and Birmingham, as well as the county of Gadsden and Macon, levy taxes. So does the city of San Francisco in California, the city of Wilmington in Delaware. There are 92 counties in Indiana that levy an income tax. In Kansas, there are 535 taxing jurisdictions. Kentucky, there are 210. In Maryland, all 23 counties levy income taxes. In Michigan, Detroit, Grand Rapids, Highland Park, and Saginaw all levy income taxes. In Missouri, Kansas City, and St. Louis. Newark and New Jersey taxes the income of residents and non-residents who work there. In New York, the cities of Yonkers and New York each levy income taxes, as there's also a tax on the residents of the New York, New Jersey waterfront. In Ohio, there are 848 taxing jurisdictions. In Oregon, there are 2 transit districts that levy income taxes. And in Pennsylvania, there are almost 3,000 taxing jurisdictions. Lastly, in West Virginia, there were 4 taxing jurisdictions that charge a flat dollar fee. So if you're an employment attorney who works in employment practices or an insurance company who has claims with employment practices liability, you really should consider engaging a settlement consultant or settlement planner early who is experienced in this area, who can take you through the process and the ways in which you can engage all parties in a creative discussion as a means to resolve your cases. So now, why would a plaintiff agree to structure an employment settlement? Number one, employment settlements offer claimants stable, secure income and peace of mind while they're considering their employability or supplemental retirement benefits. Number two, it helps spread out tax liabilities over future tax years, thus smoothing out income and potentially alleviating high tax obligations in the year of settlement. If properly structured, taxes are paid when the payments are received. Possible mitigation of alternative minimum tax where applicable. Possible avoidance of higher marginal tax brackets and preserving deductions that may be lost at higher tax brackets. The cash flow can be structured exactly the way the employee wants it. It's not an all or nothing choice. That's very important. The employer can make the employee whole on damages such as lost pension differential without the typical gross up for taxes. For example, a 55-year-old claimant claims lost pension differential of $2,000 per month, starting at retirement age 67. So instead of calculating the present value of cash flow using an arbitrary discount rate and then just simply grossing up for the amount of taxes that are to be paid in a lump sum, it's possible to calculate the cost of an annuity or a funding agreement that will pay that precise amount starting at age 67. So why use expensive dollars when it's simply not necessary? As far as how this works, there are a number of domestic and non-domestic options for employment-related structured settlements and periodic payment settlements. And the menu of options includes both fixed annuity-backed options as well as market-based solutions. There are also options for attorney fee deferrals for attorneys who are paid via contingency fees. What I've found is that a number of plaintiffs do their own research, and they do contact us directly off the internet because their attorneys are not bringing up this valuable option. So I encourage plaintiff attorneys who litigate employment cases to become more familiar with this option, and I'm happy to help. Enable your clients to make informed decisions about this because not doing so can be costly to uninformed clients and turn your positive efforts into an unfortunate and preventable negative. Engage an experienced settlement consultant early enough in the process. Let us help you and your client explore their options. Let your adversaries know that your client wants or is considering a structure. When dealing with large corporations or government entities, here's a pro tip. There are bound to be questions and layers of corporate approval required. These are areas where I can provide assistance. Tools such as qualified settlement funds may be useful where appropriate. Thank you for watching. I hope this has been helpful. My name is John Dare, forstructures.com. I work on cases all over the United States, and I'd love the opportunity to be your employment settlement resource. You can reach me at the number below. Have a fantastic day.